I hope everyone hears me well. This will be good because I can't hear myself, so hopefully the mic works well. What's up, everybody? So this today actually would be considered day five and day six. So just before I go into the direction we're gonna do, so we're gonna do things a bit different. Normally we have a interactive session when we do our Zoom call within our community. It's more interactive. I want you guys interacting with me while I break down, but this one's going to be different. So I'm going to do it similarly to how I've been doing from the past videos. So I'm going to take this recording session here just to have free thoughts, just to kind of go over the chart, explain these things that pops out to me, just kind of get an insight of what my thought process is, what I'm reading, how do I read it, etc. Save all questions for after this recording, as this is a shorter recording. I think it's about 35 minutes, 40 minutes tops it will run for. After this one, we'll do the second video, which will be designated to just you guys' question, because I've gotten a lot of questions. Some will probably get answered as I'm doing my thought process, and others will be answered more directly when we on the second video. So without further ado, I don't want to take any more time from this presentation. So let me first, so I'm gonna need you guys for everybody to mute themselves, right? You guys can do that. Mute yourselves so that way I don't get an interruption within my thoughts from like a outburst or something. Because I don't remember or know how to mute everybody. I don't remember how to do that. Let's see. Okay. Yeah, you guys just mute yourself for now because it's gonna take me longer trying to do that, so I can leave it up to you guys to do that on your side. All right, so let me share my screen. Let me share my screen. So what I'm going to do today, I'm going to go over this trade that I took on Friday, right? This is the trade that I took on Friday. I haven't traded all week intentionally to wait for the trade of the day. Um, so my brother AB, please mute yourself, brother. Never mind. I got it. I see I could do it now. So yes, so we're gonna go over the trade of the day, which was that trade, and I'll go down my thought process. Hopefully, you've already seen video 1 through 4, so I'm not gonna go all the way back because I feel like a lot of things that I've already explained on 0, 1 through 4 is gonna somewhat be a continuation from here. But let's do it this way for right now. Hopefully, you guys can see my chart clean and clear. I'll be zooming in, so don't worry. I will keep that in mind that sometimes it's hard for you guys to fully see it. All right, so let's get started. So what was I looking at? I like to really look at the market from, and I'll do 4 hours. Usually, really, I didn't want to even be on a 4 hour. I wanted to go straight from the 15 minute of that day and get into the trade. But I want to give you a perspective of my thought process, at least from the 4 hours, to see how I bring context of the higher time frame into my daily analysis. Because there's so many different ways to catch a long trade. And in order to know when that long trade is going to happen, you have to have that high time frame context because then you can see how much further price is likely to go. So if I'm ever looking at the 4 hour here, I can see that I'm coming off of this supply zone that caused something, in this case, broke structure, or even all the way down here where it reached and broke another structure and of this low, for example. So understanding where I'm at is very important. And I see that I had a line up here, so I'm guessing that must be a trend line on a higher time frame. So yeah, so I have a trend line on a daily. So I'm understanding where I'm at, meaning I know that there must be more liquidity above here, which there is a huge space right here. And another huge space right here. I could see that. That's clear to me. And that's trend line here. So that's clear to me that this is a price that last thing it's done on the daily was induce past a break and retest level, push down to give a BOS, then making a retracement. Could this be the retracement, the last point it reached before it creates the new leg to the downside because it broke the structure? Or could this be a retracement to fulfill these higher levels simply because of this inducement that did not break underneath this previous low that led to the high up here where the trend line is? So that's the reason why I can see, okay, we should be visiting higher levels like these. So that's higher time frame context, me being brought back to the daily because of what the 4 hours telling me. So on the 4 hour, I understand now all of the narrative that I've just looked at the daily. I understand what's going on just looking at this supply. I already understand what type of liquidity is here. Now, if I'm looking at it from this perspective, I've reached this demand and I've led to a breakup structure to the downside. Even if I'm expecting price to still have to come up here to fulfill some narratives here, the fact that this low broke structure to the downside, I know that I have to come break this low before I make this move up here. Otherwise, it will throw off structure. Granted, yes, it could still be low, high, low, and then price now creates new high, and all of these are just internal. These just become internal price between this range and the new range that it'll reach. It will be a break. So it could be that. So the reality is because of this BOS right here, I understand that price is going to most likely come to between this trading range, come to a premium level here. So where's the premium level from this 4 hour? I could easily just do this and say, okay, premium level somewhere here. I don't know exactly what the premium level is yet, right? This is my thought process. I may not know what exactly the premium level is because maybe price is not showing a supply or demand. But in this case, it looks like this, right? For those of us who's very more specific about how our order blocks need to look, I know some of us, if it doesn't look exactly like this one here, we don't want to qualify. We want it to look exactly like this, guys. Sometimes the order block is not going to look perfect like this, where it's a perfect bullish candle and a perfect engulfing candle to make you say, "Hey, I'm in order block." Sometimes it's going to disguise itself like this and break down candles. But you have to understand that these candles, the times they represent, right? If I'm on the 4 hours, I know these are collective of 4 hours. If I want to see what type of demand this is, most likely if I go to like a daily or a weekly, I'll be able to see that this is just one bullish candle that got engulfed. So I don't need to see, or if I go to a lower time frame, I could see this right here probably being a better polished demand on a 15-hour or 30-minute. So I don't want to spend too much time speaking on this context. I just wanted to kind of bring light to how I went from that daily understanding of what's happening to tie it back to my 4 hour, knowing that I still need to make that daily push to the side above. But the simple fact that my last low on the 4 hour that led to the mitigation had a break of structure to the downside. What last low am I talking about? This one here. This last low that led to this mitigation, price broke underneath it with a body. So that tells me price wants to go lower. Okay. So just that understanding itself is to keep it simple. So why you want to also look for additional context? Well, why wouldn't you to come lower? Then now I can see liquidity. That's all you need to ask yourself, or I ask myself when I'm trying to figure out why price needs to go somewhere. I say, okay, where is the liquidity that it will take so that it can turn around when it's ready to say it has enough fuel? Okay, I see trend line here. I see there's trend line here, trend line liquidity going on here. There's another trend line here. Price already took that one. So I'm seeing levels that need to be taken. I see a early buyer's trap. Why is it an early buyer? Because even though price induced this low mitigate here, I can tell that this level has much more liquidity left in here that price would want to take instead of reacting from here. All right, now let's dive into the session of why I look for that trade. So if I know that price now needs to come lower to that demand and it's reached the premium level, I'm only coming looking for sell. The whole week, when price was doing all this, all I'm seeing is this, a huge imbalance, all in these levels, a huge gap, all this right here. That's a huge liquidity that price needs to take. Now, was I trying to target all of that? Unrealistic. That's over 200 pips. But does this look like a possible move that could happen over the span of the week coming? Yeah, why not? Look at all this liquidity here. Price don't have to do it all at once. It could easily just do stuff like this. Just start breaking his way down, induce, and then keep making his way until it finally reach here, and then it begin the retracement to this bullish move. It could easily do that because what does that do? That rebalances the market. Look at this, how unbalanced this is. If this is a market that wants to go bullish by breaking the last swing high here that brought to this low, it needs to have some sort of retracement to pick up liquidity. In this case, tap something like this and push out, or come lower to tap something like this. But in this case, if we come lower to get here, I believe we just come take the whole range because there's more liquidity to the downside that we talked about. But that's for another break down in another narrative. So let me dive into my thought process. So now understanding this, knowing that we have this big liquidity pool here, coming into the session, all I'm looking at is how every week price did not give me no clean entries, no clean opportunities for me to take a trade, whether it was pro trend or counter trend. All right, let's look into it. Let's look at it this way. We'll start from this because this was some of the videos. This was some of the videos that I did where I broke it down to you guys on these recordings of 1 through 4, some of these sessions here. So when you start marking out your liquidity pools, right, you want to start seeing it from the above side of the candles. Don't look too much on the insides unless you're about to take a trade and you're looking for the liquidity to sweep for your entry. But when you're looking at zones that the market has resting liquidity, you want to get it from like the 5 and 15 minute, because those are the bigger pools that you know price is gonna go what on a 15-minute level. If you watch the last video I posted, you know that from every medium inducement, price pushes to the next medium inducement. If it catches the medium inducement that's supposed to lead to a retracement, well, how do I know it's supposed to lead to a retracement? Well, because it came from a low. There was a low that led to a high that broke above here. So if price needs to retrace and it did it here, but this probably wasn't 50%, was at 50% level, so therefore it became liquidity again. Then price from this low now breaks above once again. You know there needs to be a retracement, but the break wasn't just any regular break, it was a medium inducement break. Previous day, right? Price took the previous day high, reach a level somewhere here. This was just a retracement for the medium inducement for this retracement. Then it gave us another one here of a 15-minute structure. This was the retracement to fulfill the main narrative, which is the still bullish. So if you watch those videos, you remember that context of what I explained about medium inducement. So this is the reason why I'm able to look at it and say, this is going to give me 18 pips, 19 pips, or this many pips to fulfill this narrative. Because if it wants to go back this way, it needs to have a medium inducement. It can't just continue bullish straight through this like this. Why? Because look where it reached. It reached a supply zone that led to something that caused a breaker structure here, that caused a breaker structure here. And it was barely mitigated. Look at the mitigation of it. Let me get closer. Look at the mitigation of the supply. And this is on the 15-minute, right? And pay attention to how I mark the supply. I'm not marking just one supply, I'm marking the entire zone. Because on a 15-minute, these are considered my POIs. They're not my entry level, my entry zone. They're my point of interest where I want to see a reaction happen from them to then show me my entry model. So when I see a level like this barely taps into the zone, at first I had it like this. This is where I'm the proper way to market from the low to the high. But being that this already mitigated in here, I adjust it to be above the zone as such, and just expecting price to come deeper, which price did. It induced that high. That became the medium inducement because on a 15-minute as well, you can see that this high was a previous day high for one, and for two, it's inside of a consolidation range. You can see how price right here just moving. What is that? Horizontally. It's just going diagonal. It's just going left and right. Not how just going left and right. So if price is just going left and right and it's not going bullish or bearish, you know this is consolidation zone. So I know both sides need to be swept because we broke out of the downside first. So when I'm marking this as a medium inducement, I'm expecting price to come take this high and give me a reaction from this level for somewhere at least. And if this level does not retrace or send the whole market to the new bearish leg on a daily or whatever time frame, the least that this level can do to me, in my perspective, as I'm reading this, is come and set the narrative for the rest of the week, so we can fill up these gaps. When I say the rest of the week, meaning the start of next week, I believe price will gap down and then it will push up again to close the gap and then continue giving us some bearish looks, etc. But that's hearsay. We'll have to just let's see what the market does. So, anyways, coming into my session, I'm marking out my liquidity. I can see trend line here. I could take a look from way down this level. I know that I'm bullish. I know that if I'm coming from way down here. Yes, I could see that these last recent BOSs. I use this highlighter to kind of keep it open for the eyes to see better. So we have these BOSs, and we haven't had. One thing I like to do is see from the BOS points from the low that led to the next one. Did we reach 50%? Okay, cool. Look at this one. Right here, we have not reached 50% yet, this level. Okay, I'll do the same thing. I'll take the fib from this one because this low led to this high break. What did this high lead to? This low here. And what did this low lead to that made the next BOS? It was this level. Okay, price did come to 50% here, to discount level here. But When it left, look at the liquidity it left. Trend line, medium inducement things that happen. All this consolidation range happened, and the high of it got broken. So I could say, okay, well, this entire zone was a consolidation range where the high got taken. Now the low isn't. Why would the low need to be taken now? Well, because we didn't even reach 50% here yet. So my discount is more right here. But even in the discount, there's still consolidation of trend lines here. So maybe price may go deeper. So maybe it might just take the whole thing because now I'm looking at all the runs of liquidity, right? So this is why you can start reading and saying if price have left so many days and never revisit to take any of these, which could have been liquidity that it took as a medium inducement to push to the next move, it didn't need none of this. Therefore, it's gonna head towards something that's gonna give it all the push to start this. All right. So the last one would be from this low. Where did this low lead to that caused a BOS? I'd say this swing high. Have we reached 50%? No. Price hasn't reached 50% here yet either. Okay, what's over here? I can look closer, right? More liquidity. So even at the discount level, price has what? More liquidity. Internal BOS that are very close to each other. Break and retest levels. Let me zoom in closer so you can see it. So this is the type of detail I'll try to be. I'm more detailed when I'm looking for liquidity and when I'm entering the market. Look at these details. Price broke above, came back down, rest above it, created another trend line right above the break and retest level. It's just leaving liquidity lying there. It consolidated here after this break and retest, induced the break and retest out right here, pushed out, gave us a breaker structure. Came back down without breaking above this high and playing underneath this low, gave us an inducement of these internal lows to mitigate deeper into this zone, which on a lower time frame would be an order block there of 3 or 1 minute or 5, to then continue to push, letting us know buyers are staying in control. You can see all the inducement. Buyers are staying in control. But what are they leaving as they keep showing intent? They're leaving liquidity, trend line, a whole break and retest, consolidation right here on the 1 minute, another trend line. So I circle this whole area and put a magnet here because I'm like, yo, price is going to be attracted to this area when it comes back this way. It's not going to respect nothing here. So, and then I could see previous day low right here. So this could be a reaction level, but because there's so much more liquidity here, it's most likely going to come through it. Somebody asked a question of how do I know after price takes one medium inducement it starts coming turning around, then it takes me out, then takes the next medium inducement, and then leaves? That's a very good question because if two medium inducements are close to each other, like this New York low and this London low, and you see this much liquidity resting next to it, what do you think is going to happen? Of course, there's still going to be a reaction here because it's a liquidity pool, but don't think that this liquidity pool is going to be the early takeoff. That's the one that's just inviting early buyers because price have this one here because it left liquidity there. But let's say this was the last one that was taken, and this Asia one is way down here, and there's no trend line. Do you think it needs to take the Asia? No, it doesn't. Because at that point, if there's no trend line here, for example, this trend line didn't exist. Let me bring the chart closer this way. If this trend line didn't exist, there was no liquidity on the price right here, and it induced this level, it doesn't need to come take Asia low for it to continue after a medium inducement of London low, even though this is another previous day low because this is not necessary. If the price is bullish, Asia high doesn't need, Asia low doesn't need to be taken. And if the price is bearish, Asia high doesn't need to be taken. But in situations where you have a London high and a New York high as your medium inducement or two medium inducement structural highs on a 15-minute, don't just jump for the first one, especially if you didn't get a mitigation. Just a medium inducement itself is not enough. You need a medium inducement and it's going to give you a reaction. So be patient, let the reaction happen, and then a mitigation. Sometimes you might get a medium inducement simultaneously while inducing, and well, not inducing, you get a medium inducement that's doing the mitigation, which is what I took on Friday. That was one form of it. So sometimes you'll get that. In those cases, you just wait for the setup. You look out for the setup, which would be your entry models. So let's go to the trade now. So we've got all this right here understood. This was a huge consolidation zone. We see why and whatnot. So let's clean up the chart and let's continue to now the understanding we just spoke on. So we already understood all this liquidity pool that's resting as to why price needs to make this push down. We already knew from the 4-hour time frame that we did this last BOS of this level right here, and then price needs to now retrace. We already know that this area right here is a premium level of this range and this range. So we know that we need to come make a lower this level. Why? Because we got this trend line, this early liquidity trap. We have this magnet here, equal lows right here, and we know we have a pull of a successful demand here that caused a strong BOS of this last high that's resting here to give us that push up. Okay, cool. So we understand why we could have these deep retracements, but we're not trying to call it all in one day. We're just trying to catch each main push of it for pro trend. So that's how we ended up here. Boom. Friday session opens up. The whole week, nothing was good for me as far as opportunity. They all look like possible fake outs. Price did them after hours, or it did it like too tight, or I simply didn't like it because the news was happening. So I didn't take any trade all week. Medium inducements happen here. Price turned around. Asia, same thing. So I'm just gonna go straight to today, on Friday. So Friday, this is first thing I noticed on Friday. On the 15-minute, remember that same high I was talking about from the consolidation. This is right here. Price induced it during this session right here. And this was at 8:45. So I'll go to the 5-minute. At 8:45, remember I said the inducement and then it also leads to a mitigation. This is one of them cases. Price is mitigating this supply. Why is it a supply? Well, remember we always talk about a supply or a demand that does an inducement is a strong one. When there's an inducement in your supply, it's most likely going to be a strong supply because especially when it leads to a break of structure. Actually, you want it to lead to a break of structure. Otherwise, I don't trust those type of supplies if it didn't lead to nothing. All right, look what happened here. We had this whole liquidity pool of trend line all right here. What did the supply do? It came and induced this whole level of liquidity. It induced it and gave you right here, gave you this break of structure. And this happened on this time frame, 15 hour on those higher time frame. We've already saw this. So this is an inducement high supply. It caused something. So we understand that this whole aspect of this push was on a 4 hours or 1 hour is just a few candles. Okay. So when this level gets induced into this zone, and you can even go deeper to validate the level, because you might say to yourself, you might ask yourself, well, how do I not pick between leaving it like this and saying, okay, price is not going to react from, it's going to induce this one instead and not just this. And then this becomes my medium inducement, and this is the high that holds. That's a good question. But then you also ask yourself, well, did this high lead to anything? Because this high had an inducement as well, right here. And it led to this internal low that caused this breaker structure. So this high is just as responsible for the BOS that happened here, just as this high is. So therefore, I'm not gonna try to pick between the two and say, okay, well, this one has, because I'm not taking it aggressive anyways. I'm not taking an aggressive entry. So because I know I'm not, I'm gonna say I'm gonna take it from here, right above the inducement, include you in it, and all I need price to do anyways is to mitigate you, to let me know that we've drawn liquidity out of this area, of this pool of structures that cause BOS, and then we've taken a previous day high. Now we have enough fuel to push behind a move. So what happens? Now let's go to the 1 minute. My favorite part when it comes to these entries. All I'm looking for is what is the most recent liquidity that was built in my session right now. Everything that I've shown you that we've saw in the higher time frame, when I'm looking into the session right now, I'm not putting that into the narrative. Right now, I'm only targeting today's liquidity that can be swept. Tomorrow, Monday, Tuesday, all the other ones can be, I can look for trades to take those down as it goes. But for now, I'm looking for this one. And I say, okay, this could be the opportunity where price makes the turnaround, this area here. So all I need to see from this zone is my entry model. And what did price show us on a 1 minute? Let's first find the liquidity because we understand we mitigated. Now we want to know what type of liquidity we have in front of us. Okay, we have this consolidation range right here. Price was just going left and right in this whole area. Remember what I told you? Until you're looking for your entry model, look at price from the highs of it. Don't focus too much on these little internal candles that's happening internally on these 1 minutes right here. Look at it as if you're looking at a high time frame. Treat it like as if you're looking at a high time frame, but for that time frame. You know what I mean? This is like the high time frame of the 1 minute. Look at the swings of it because it's easier for you then to identify range in areas that are consolidating than it is for you to find range of areas that are not. Like I can look at this. If I'm looking at the swings of this 1 minute, I can see that this whole area right here was a consolidation. Now I understand why price has to take this level because look, trend line all right here. Because what is price doing here? Just moving left and right. It's not moving down like this is. It's not moving up like this is. So if it's moving just like this, like a car on a road, then I could say this is a consolidation range. So very important when you're looking at those 1 minute to look at it from that perspective. So what did I see? Um, Consolidation range right here, trend line that was built right on the consolidation range, and then trend line underneath it. Okay, one pull right inside of London. What's happening right here at the London Open? Trend line, I put it in a channel, and then it broke above the channel. The low of the channel hasn't been taken. This level of the channel has not taken. Okay, that needs to be taken. What's behind it? Build up, a build up of what? I could see there was a build up of these levels right here. I'm reading these liquidities. There's a buildup of these levels right here. This was a demand. Price did this inducement, pushed out of the demand, caused a BOS. Reached the level supply, right, of induce these equal highs when it mitigate the supply. Because this high led to something, internal structure that caused BOSs, price gave a reaction. To come do what? Smart money trap must sweep some sort of liquidity. Price came back down, created these equal lows, as a buildup, induced it while still respecting this low, and then pushed out. Hasn't broken above this high, instead created equal highs at this level. So all of this lets us know it's building liquidity right here and liquidity right here. More reasons why we understand we're in a consolidation range. So when we have that and it leaves a trend line like this going all the way across, we understand more liquidity. Another form of liquidity we see is a London low and a New York low resting together. We know whenever we see two of these sessions lows at the same point, that's a huge liquidity pool. So that's the reason why I ended up targeting these lower levels for my TP. Um, so let's go into the session now. So when that's all marked together, we haven't taken no big sell all week. It's just been bullish, 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 bullish in the morning as well for London. We know we're gonna get a reversal because we had medium inducement that happened right here. See this wick? It did the medium inducement. You don't want to get caught on this wick and say, "Oh my goodness, it's selling off," and you start selling. Wait for the mitigation. Price came deeper into the level. Mitigate. We're still waiting. At this point, it's past 9 o'clock. It's like 9:15, 9:13. Price give us one leg retracement. Let me get closer to it. Let me see how we doing with time. Okay, we're good. Price gave us one leg right here. And for those of you who's been practicing the two leg, this is an opportunity to clearly see it. This is a low. This is a high. This was a previous high. Price broke above it. Break and retest traders got invited. This became a low. This became a high. Price came down, induced break and retest traders out, and still have more break and retest traders left in it because some of them, their stop loss is right here. And this is also now a smart money trap. Why is it a smart money trap? Somebody asked me, how can something become a smart money trap if price didn't mitigate it? Well, that's more reason to see it as invalidation model, right? When we mitigate a supply before a demand, the demand has to expire. The demand becomes invalid. Same way when we mitigate a demand before supply, the supply becomes invalid. So if we did not mitigate this demand, but we come to the supply, then of course it's gonna fail. So that's what happened last week. From one of the questions that just popped in my head while showing this. Anyways, price did the two leg. So we had the to here, retracement to here, the body close. That's the confirmation we looked for. From the low that led to the start of the second leg, a body closer. So that gave us confirmation. So now what we're looking for is, okay, what liquidity is left? What I like to do is go from the last high to the low and see where's 50%. 50% is right here. And it's a wick high. A wick high that did what? Caused something. It caused this breakup structure. Not just any regular wick high, it caused BOSs. So I know if price takes this push out, because this is already in people's mind who trades market structure, that this high should hold. Why? Because they're saying we broke here and we broke here. So they're saying price should stop here and leave. And this just remains by itself. No, price not going to leave without an inducement. These people become the early sellers that left because they just saw this little light retracement. It's getting messy. Hold on. They saw this little light retracement to 50% and they think that's enough because they know 50% should be enough. But when price revisits 50% levels, that's already been visited, it becomes liquidity. So that's why we know it's going to be taken out to mitigate our supply that we were waiting for price at to sell off. Cool. So what that led to us entering here. Why did I take so many entries? Simply because of the opportunity was presenting itself. So I waited for it and I looked for all of my entry models, which was present. This was a high that led to a low that broke underneath this structure. Price came into this level, impulse candle right here. This was an impulse candle, candle before the impulse. I just covered the high of it right here. This was my second entry. Another one price showed me. Same setup. This was a high now that led to this low. Price broke structure. Price retraced. Retraced to where? Impulse candle. That broke underneath this internal low because it was high, internal low, internal high, break again. So this is technically like a two-leg protocol again. So price showed you another two-leg protocol. If you didn't catch this first one, it gave you another two-leg right here. And then it still gave you a structure right here. Once it left, we had impulse candle. We had the candle before. I enter my third position here. And on the last position, I entered it right at this level. Why? Because once price mitigated here and gave me this retrace, this push down, came back up, respected this level once again, I entered this like as a market entry, and I just took the sell with it. Because at that point, I know price is done. Is even though it was building this trend line, we've mitigated too many deeper levels, and we're coming from a strong major inducement after mitigating a 4-hour supply, and you've already given me a change of character break of structure over 2-3 times. You're not going to just make an inducement of this level and push up when this retracement is only 50%, and you have all of this, you have this demand right here, which I mark as a smart money trap. So I know at least you're gonna do is reach to this demand. You're gonna at least come to this demand to give a decision, to do something, create something, you know? So that was the narrative. And as far as my TP, at this point, I understand all this liquidity. And we have about 5 minutes of this segment, and then the next one will be the Q&A, guys. So I just showed you all of the opportunity to enter a train that left the station, how you can still find your entries. Don't price left you from up here. Now you're still looking for something that needs to come up here to get you back in up here, except that it already left the station. But that doesn't mean you can't catch this one. You're just gonna have to adjust with your TPs. From here, you know if price goes from way up here, excuse me, from way up here, pushes down to this level and comes here, it's not gonna come 100% of the way to then fulfill this move. That's not realistic. But you know, if you get from up here, price does this, the most you're gonna get is like a 50%, 618, and then it's gonna continue to the next leg. But if you get in from the third leg of it, so this is the second leg, the third leg right here, you get in here and price pushes here, but then it starts to make a retracement, you know it could reach potentially here because that's still respecting this structure before it pushes down again. So you understand if you're taking this trade, maybe I'll get out right here because I don't want to be in hold for price to revisit here to continue this move. Because you know you got in at the A plus area. It's not going to retrace 100% to fulfill this move if it already did the necessary BOSs to tell you it has to go to bearish. So you have to really take market structure for what it is. The price is not going to lie to you. It's going to show you exactly what it has to do through bricks of structure. You just have to use the high time frame narrative to complete that. So the last part of this I wanted to show you on is how I find the potential TP for it with this high time frame narrative. Why didn't I say, well, price could stop at this range and turn around from here to go more bullish, or this range, etc.? Why did we target London low? Because of all of the liquidity that's lying here versus the amount of liquidity that it needs to break this level. This is a strong level. We just analyze on a higher time frame the sort of manpower that was resting in this level. That's why we marked out the entire block, because we see that that whole range of this whole block, look at this entirety of it. It has caused some significant breaks of structures on higher time frames like the 15-minute. Excuse me while this loads. The 15-minute, we can see that this range right here has had some significant liquidity cycles, highs being induced that led to BOSs multiple times, and we had structural high levels that were left there to be induced to mitigate into it. It's almost like price set up the perfect trampoline for itself to begin the retracement that needs to begin. And this might throw you off even more. It's the simple fact that this was the highest point of the premium level. When you use the premium level, you can see that this was the highest point of liquidity price left for you to take. Any other liquidity for a price to take is way up here. That's outside of premium level. At that point, we're just going to continue. We might as well just be bullish to come take this high out. But how can we just be bullish to come take this high out when market structure tells us that the last low that led to this mitigation high, which was this low here, a price broke underneath it. It can't. It can't just go bullish like that. It has to come do at least induce here. If price wants to come continue here, the least it has to do is induce this low with a wick and not a body if it's not ready to come lower than this levels yet. It has to induce it with a wick. But if it closes a body, any retracement that happens after that is to continue come fulfill again. It has to follow the laws of market structure. So I'll leave you with that for the last 2 minutes of this recording. The whole narrative behind why we took that trade to target such low levels and anticipate that 1 to 19 is simply because we see we had so much liquidity left. We also understand that EU is one of those pairs out of nowhere, and GU and a lot of other pairs out of nowhere will start giving you this random 60 pip sessions, 80 pip sessions. I used to see that happen, but I never was able to predict them. I used to call it out in the past where I'd be like, man, I got out of a trade and I took a 1 to 3 and this thing ran from 1 to 30. I took a 1 to 5 and this thing went from 1 to 23, but I never could predict when they were coming. And that was always because I was always looking at the market from what can I get just from today, from this 15 minute, from this 1 minute, from this 5 minute price action move. But when I started looking at it from a higher time frame, I became more patient with with letting the liquidity finish building up. I went through 4 days of no trading, not because I didn't want to trade, because I understood I wanted to see a reaction from this zone. I said that to you guys on those video 1, 2, 3, and 4 recordings. I spoke about how and I marked it with those the highlighter where I expect price to start the retracement from something like this or a higher level above it. So when I have those narratives, I wait to see it play out. When price gets there, I'm more excited for the reaction out of that zone than I am for the trade that I'm taking towards it where it's not super high probability. Because I know this one's going to give me a massive run. I know this one's going to give me that reaction that nobody's expecting. I know this is one of them trades that's going to not be what everyone is expecting. So those were the last words on this trade. I hope you guys find some sort of values from this breakdown. The next video, I'll send it right into this recording. I don't know when it's gonna cut off. It's gonna be for Q&As. Any questions you guys have or have DM'd me, we'll try to go over it within the diagrams of this market structure. All right, see you guys on the next video. I'll end it here. Let me see any questions before this one gets deleted. Are you able to kind of explain USDJPY? Can you zoom in, please? It's quite small. Oh, I'm sorry if it was very small, guys. Or can you go through break and retest? Okay, these the break